Good morning, bulls and bears. Here's your morning market update. Starting with the US dollar, volatility remains elevated. The dollar index is on track for its third consecutive monthly decline, down nearly 4% from the peak, the most volatile month in six. After briefly touching a 4 year low near 95.57, the index rebounded toward 96, but the broader bias remains bearish. The Federal Reserve held rates steady, slightly upgraded its growth outlook, and markets continue to expect the next rate cut around June. Positioning remains net short, suggesting rallies may be sold. Resistance is seen at 96.56 and 97, with support at 95.56 and 95, and downside risk toward 90. In oil, crude is trading near $63.3 per barrel after a near 3% gain on Tuesday. Prices are caught between short term supply disruptions from U.S. winter storms and Middle East tensions, and longer term supply pressures from rising inventories and recovering production. As a result, crude remains range bound. Support is at $61.4 and $60, while resistance sits at $63.5, followed by $64 to $64.5. Turning to gold, prices surged more than 4% to a fresh record near $5,414, supported by a weaker dollar, policy uncertainty in Washington, and continued expectations of future Fed rate cuts. Strong central bank buying and ETF inflows continue to underpin the market. Momentum remains strong but overbought. A move above $5,300 keeps the uptrend intact, targeting $5,450 to $5,500 per ounce, while a break below $5,000 would signal a momentum shift. Finally, the Australian dollar against the US dollar extended its rally, breaking above zero point 0.7, driven by broad US dollar weakness and strong Australian fundamentals. Bond yields are at multi month highs, unemployment has fallen, and attention now turns to key Australian inflation data due Wednesday. While the trend remains firmly bullish, overbought conditions raise the risk of a short term pullback. Resistance is at 0.708 and 0.7157, with support at 0.69 and 0.68. In volatile markets, patience and discipline matter more than prediction. That's your morning market update. Thanks for watching.